Friday, April 26, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about GDP and how it's overestimated and how the US economy is actually been shrinking in real terms over the last 10 years or so. And I've spoken about this before. And I think it's even worse than most people think. And by that I mean like John Williams of Shadow Stats. He looks at GDP as well. Highly recommend that website, shadowstats.com. And I've spoken about this before, and I'll go over it again today of how they calculate GDP and how, in my opinion, real private sector GDP has been languishing for a decade. Of course, today at 8:30 a.m. New York time or Eastern time, the Bureau of Labor Statistics is going to publish the preliminary number for first quarter GDP for the U.S. They already published the events number about a month ago, now the preliminary, and in a month's time they'll publish the final number. Before that, of course, I'll go over what the markets are doing this morning. It's just before 8:15 a.m. London. So yesterday, just before I go over the markets, we had a negative day for the Dow. It was down 0.5%, about 135 points. S&P was only down a point, so virtually unchanged. And the NASDAQ was up 0.2%, mainly because you had good numbers the previous day out of Facebook. So today, right now, spot gold is up just under $5 at $12.82, right near the highs, $12.8250. The low's been $12.7650. Silver is up 10 cents, so outperforming a little bit gold. It's at $15.03. High's been 15.05 and the low 14.92. The Dow right now is continuing lower. It's down about 53, 26,409, down about 0.2%. S&P down about 6 as well, 0.2%, 29.20. The NASDAQ 100 future is down 30 or 0.4% at 77.84. So stock markets continue to drift lower. Currencies, pound is back up above 129, up slightly, 129.08. So the currencies have been weakening a bit versus the dollar, euro included. Euro is back up a little bit here, 111.44, up 0.1%. Dollar's unchanged against the Japanese yen, 111.62, and it's down. Dollar's down 0.15% against the Chinese yuan at 673.89. Crude oil. Crude oil is drifting a bit lower. We've been above 66 WTI. Right now we're at 64.88, so down about 0.5%. Brent is down 0.4% at 73.44. Let's have a look at the bond markets. The 10-year is fairly steady. The 10-year yield is at 2.52, so it hasn't moved that much in the last couple of days. Today's number, of course, GDP numbers will be important for the bond market. And don't forget, next week as well, we're going to have a Fed meeting and press conference on Tuesday and Wednesday. So I don't think they're going to do anything. Some people think they might cut rates. I don't think they're going to cut rates right now. I don't think things justify a rate cut for the moment, but you never know. So I think, yeah, it was Benjamin Disraeli, former British Prime Minister in the 19th century, who said there are three kinds of lies: lies, damned lies, and statistics. So and that's very true. And it's interesting because I'm reading a book right now, which I'll probably talk about in the future. It's by Kwasi Kwarteng, War and Gold. Kwasi Kwarteng is actually an MP in the UK, Conservative Member of Parliament. And yeah, I haven't finished it yet, but I'm reading about the 19th century and the gold standard in Britain. And it actually talks about how Benjamin Disraeli, as a young man, was a speculator. And he also wrote reports for banks about markets. So he knew a thing or two, I think, about lies, damn lies, and statistics. And he was heavily involved in the South American mining stock bubble in 1825. So this has been going on for a long time. It's an interesting subject, but I'll come to that maybe in another video because this is not what I want to cover. So I've covered this before because if you look at the definition of GDP and how they calculate it, there's some different ways they do it. They call it the income approach, production approach, and the expenditure approach. And that's the one I'm going to focus on because it says here on Wikipedia, according to the U.S. Bureau of Economic Analysis, which is responsible for calculating the national accounts in the United States. And I quote that bureau. It says, in general, the source data for the expenditure components are considered more reliable than those for the income components. All right. So this is the formula for GDP under the expenditure approach. It's GDP is Y. So and it's the sum of C plus I plus G plus X minus M. So what is C? Well, it's consumption. What is I? It's investment. What is G? Government spending. And what is X minus M? Well, it's net exports. Exports minus imports. The problem I have is with government. Because government does not create wealth. Government actually extracts wealth from the private sector. So the fact that they add government spending there, to me, is already a problem. The other thing that's, by putting that government spending there as part of GDP, it allows government to basically overspend, so run deficits. And like right now, the US is running 5% of GDP deficits. That means that there's 5% extra spending in the economy that is not, how can I say, natural market driven in the private sector. It's forced by the government. So let's say the government, the GDP, real GDP is growing at 5%, but we have a deficit of 5%. A government is running a 5% annualized deficit of GDP. I would say that the real healthy growth in the economy is zero, right? So we need to keep that in mind. And that's why, in my opinion, US GDP has looked better than other countries in the last few years because the US, the Trump tax cuts, hasn't been followed by a decrease in government spending. So we've had, all this government spending going into the GDP. Because if you look at the economic data from The Economist in the back here of the magazine, it says US GDP for the first quarter, 2.2. That was the advanced number, right? But it says that the US is running a minus 4.9 budget deficit as percentage of GDP. So in my book, that means that they're running really, the GDP is running negative for the real economy, the private economy. And then you look at Germany, Germany GDP is expected to grow at 1% for this year, 2019. But they have a budget surplus of 0.8%. So you tell me which economy is healthier. I mean, it's, as Disraeli said, lies, damn lies, and statistics, right? So that's what I'm trying to say here. And this is not even including the fact that the government underestimates the cost of living, the rising cost of living, or what they call inflation or CPI, because you need to know as well that there's a difference between the nominal GDP and the real GDP. And how do they calculate that? Well, the nominal GDP is without taking account of the rising cost of living. So they have what they call the GDP deflator or the GDP price index. Look at shadow stats as well. You see how the government used to calculate CPI back in 1990. It's more like would be at 5% right now, or in 1980 would be almost at 10%. And he's got the same alternative GDP annual growth shadow stats, and you can see that it's running under the zero line. His GDP alternate GDP. So what does Mr. Williams says the SGS alternate GDP reflects the inflation adjusted or real year-to-year GDP change adjusted for distortions in government inflation usage and methodological changes that have resulted in built-in upside bias to official reporting. So there you go. Aside from the fact that they include government spending, they underestimate inflation. So I would be keen to maybe ask Mr. Williams if he's thought about the fact that if you don't add government spending, it probably would be even worse. What does that all mean for the world? Why am I talking about this? Well, it's just to show people that they need to be aware that things are not what they seem to be, and that you need to make take that into account, in my opinion, in making your day-to-day decisions about your finances. Be savings, or if you're considering starting a business or anything, be aware that a lot of these numbers and statistics are very fudged. And I think the consequence of that is that we're seeing more and more inequality, of course. We're seeing more and more disillusion with the whole system. We've only got a few people that benefit from this, of course, the speculators, the hedge fund managers. Ray Dalio talked the other day about the inequality in the American dream, but he didn't touch upon any of this. He just thinks that the government should tax people even more, especially the rich. But I think that's not the solution. The solution is to look at the fact that things are not as they are, and the government has been, deceiving the public about what's going on. And why do they have to do that? Well, because we are under a debt-based system that actually, how can I say, inflates the value of the currency away, lumbers the general public with more and more debt. And in order to keep that from coming out, they need to fudge the data. They have to keep lying. But one day, all this is going to come out. You can't lie forever. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Don't forget to hit the little notification bell above to be notified of my new videos. You can follow me also on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.